Kenya's roads are changing, quietly but powerfully. There's a new sound in town, or should I say, a lack of sound? From silent buses gliding through Nairobi to bodabodas charging up instead of fueling up, the electric revolution is here. Welcome back to Insurance World TV, where we decode how the world of insurance evolves with every new technology. Today, we're diving deep into a topic that's buzzing or humming across the automotive and insurance industries: the shift from internal combustion engine vehicles to electric vehicles, and what it means for insurers, valuers, assessors, and repairers here in Kenya. Let's start with where we are right now. Kenya is slowly but surely joining the global electric mobility wave. According to data from the Energy and Petroleum Regulatory Authority, EPRA, more than 2,500 electric vehicles were registered by 2024, and that number is expected to grow past 10,000 by early 2026. Companies like Busigo, Rome, and Spiro are leading the way, introducing electric buses and electric bodabodas that are not only cheaper to run but also better for our environment. The government is playing its part too. The draft National E-Mobility Policy offers import duty exemptions, zero-rated VAT for EVs, and a push for local assembly. Kenya Power and KenGen are setting up charging networks to make it easier to plug and then fuel up. And on the skills side, training programs by African EV and NIDA are already producing Kenya's first generation of certified EV technicians. The ecosystem is forming, but what does this mean for insurance? That's where things get interesting. Core risks unique to electric vehicles, EVs. Now, while Kenya's shift to electric mobility is exciting, it's not without its challenges. Electric vehicles, or EVs, bring along a set of unique risks that are quite different from those of traditional internal combustion engine cars. And for the insurance industry, understanding these risks is the first step toward developing the right kind of coverage. Let's start with the most obvious, the battery. It's the beating heart of an EV and also one of its biggest sources of risk. We're talking about battery-related hazards such as fires, explosions, and high-voltage exposure. You see, EV batteries can experience a dangerous process called thermal runaway, a self-heating chain reaction that can cause the battery to ignite or even explode. This can happen due to mechanical damage in a crash, electrical faults, or overheating during charging. And once it catches fire, it's extremely hard to put out. EV battery fires can take hours or even days to fully extinguish and sometimes reignite weeks later, even after being submerged in water. They also release toxic fumes, posing serious risks to emergency responders and bystanders. Next up, charging hazards. A malfunctioning or incompatible charger can lead to fires or electric shocks. Charging also generates heat, so proper ventilation and certified installations are crucial. As Kenya's charging network grows, insurers may begin requiring proof that a vehicle's home or workplace charger meets safety standards before underwriting the risk. Now, let's talk about safety and repair risks. EVs operate at very high voltages, often above 400 volts. That means repairers and assessors face real dangers of electrical shock or arc flash if they don't have the right training insulated tools, and protective gear. And because Kenya has only a handful of certified EV technicians, insurers may need to partner with approved workshops or even train assessors to handle EV-related claims safely. Another factor, vehicle weight. EV batteries are heavy, and that added weight can overwhelm crumple zones in some models, leading to more severe injuries and collisions. This could impact not only personal injury claims, but also vehicle repair costs and liability outcomes. And then there's range anxiety. With Kenya's limited and unevenly distributed charging infrastructure, EV drivers risk running out of power, especially on rural or long-distance routes. That's not just inconvenient. It could affect roadside assistance and rescue coverage under motor policies. Let's not forget the cybersecurity threats. Modern EVs are connected devices. They communicate with apps, chargers, and even manufacturers through the cloud. This opens doors to hacking, data theft, and software malfunctions. Imagine someone remotely disabling your EV or tampering with its data. It's rare, but possible. That means insurers may soon need to consider cyber endorsements or special clauses to protect both drivers and manufacturers. And when it comes to valuation and salvage, things get even trickier. EV batteries degrade over time, much like a smartphone battery, meaning range and performance drop gradually. So, how do you value an EV after 3 or 4 years of use, especially when the secondhand market in Kenya is still developing? Damaged or salvaged EVs also carry a reignition risk, especially after flooding, which makes storage, towing, and recycling more complex and costly. Improper handling could even create environmental liability issues. And finally, there's complex liability. With EVs, there's hardware from one company, software from another, and charging systems from yet another provider. So, in case of a malfunction or accident, determining who's actually liable, the driver, the manufacturer, or the software provider, can be a legal maze. So when we talk about core risks unique to EVs, we're really talking about a new ecosystem of challenges. From battery fires and cyber threats, to valuation, safety, and infrastructure issues. These are the realities that insurers, assessors, valuers, and even repairers will need to understand if Kenya is to insure the electric future responsibly. Insurance response. Now let's talk solutions. How the insurance industry in Kenya can and must adapt to the age of electric mobility. The transition from fuel engines to electric power isn't just an environmental shift, it's an underwriting revolution. Policies that once fit internal combustion engines no longer match the realities of EVRisks. So, what changes should insurers start preparing for? First, battery protect endorsements. Insurers will soon need to define exactly when and how an EV battery is covered, and under what conditions. Think of it like this. Battery coverage will depend on its state of health. A battery with 90% state of health may qualify for full replacement in the event of damage, but one with a 60% state of health could result in a deductible or partial payout, similar to depreciation for engine wear. These endorsements will also need to specify whether thermal runaway, electrical failure, or charging faults are covered and under what circumstances. Second, charging equipment cover. As more Kenyans install home and workplace chargers, Insurers will need to extend protection to charging units, connectors, and related wiring. Coverage should include fire, surge damage, and malfunction during charging. After all, a faulty or uncertified charger could be a fire waiting to happen. Third, out-of-charge assistance. We've all heard of roadside rescue for flat tires. Now we'll need roadside charging. Imagine you're in Naivasha or along the Nairobi-Nakuru highway and your battery dies mid-trip. Future motor policies can include emergency mobile charging or towing to the nearest charging station. This will be especially vital for drivers still battling range anxiety. Fourth, cyber risk protection. Modern EVs are computers on wheels, constantly connected to the cloud. That connectivity means exposure to hacking, data breaches, and software interference. We could soon see cyber add-on covers that protect against physical loss caused by digital interference, like remote unlocking, battery manipulation, or malicious software updates. Finally, pricing models must evolve. Traditional motor rating doesn't work here. Premiums should reflect battery capacity, charging habits, and telematics data, such as driving style and energy efficiency. Reinsurers like Munich Re and Swiss Re are already developing frameworks for EV pricing. Kenyan insurers should adapt these to local conditions, factoring in power grid reliability, terrain, and even charging infrastructure access. In short, insurance policies need to charge up, just like the cars they cover. Stakeholder advice. Now, this shift isn't just about insurers rewriting policies. It's a transformation that affects every player in the motor insurance ecosystem. For insurers and underwriters, start by investing in data and partnerships. Work closely with EV manufacturers, importers, and charging network providers. Train underwriters to understand EV components, repair costs, and battery degradation patterns. Run pilot products to collect local experience before rolling out full-scale covers. And one key thing, review your policy wording. A traditional motor policy designed for petrol engines simply doesn't fit the realities of electric vehicles. For motor valuers, you'll need to revamp your valuation methods. Unlike traditional vehicles, much of an EV's value lies in its battery health. Start using state of health, so reports, check the remaining warranty years, and factor in charging history and software updates. These will become critical inputs in determining market value and claim settlements. For motor accident assessors, safety comes first, and this is non-negotiable. EVs can carry voltages of up to 800 volts, even when powered off. Assessors must receive high-voltage isolation training and use specialized equipment. Never inspect or touch a damaged EV without verifying that it's electrically safe. Also, work closely with fire departments and emergency responders, because EV fires require different extinguishing techniques and cooling times. For repairers and garages, this is the moment to upskill and invest. EV repair isn't just mechanical, it's digital. Garages need insulated tools, OEM diagnostic scanners, and high-voltage safety certification. Insurers should begin accrediting a list of approved EV repair centers to ensure quality, safety, and cost control. Because one wrong move on a high-voltage battery isn't just expensive, it's dangerous. So, here's the big picture. Kenya is moving toward electric mobility. It's cleaner, quieter, and more efficient, but it demands that our insurance industry evolve alongside it. From underwriters crafting new clauses, to valuers testing battery health, from assessors embracing new safety standards, to repairers mastering high-voltage systems. Every stakeholder has a vital role to play in building trust and safety around EVs. Insurance isn't just about protecting assets. It's about understanding change. And this change is already rolling down our highways, one electric vehicle at a time. If you found this video insightful, give it a thumbs up, share it with your colleagues, and don't forget to subscribe to Insurance World TV, where we educate, inform, and empower the insurance community. Electric vehicles are not the future, they're the present. And it's time our insurance industry caught up.